Chartered Accountants, Bangalore. He is also a co-author of the book, GST, Where Did My Profits Go? He handles representation services before CESTAT and quasi-judicial authorities. He undertakes a training to clients as well. He has exposure in international taxation, that is Dubai VAT implementation. Ladies and gentlemen, let's welcome CA Veeresh S. Kandgol for the session speaker for today's GST webinar. Over to you, sir.
Are you able to see the hello? Hello. Hello, sir. Sir, are you able to see the screen?
Sir, your voice is feeble.
Now are you able to hear?
I think if you're connected to Bluetooth, I think if you remove it, it'll be much more audible, sir.
Not connected to Bluetooth, but it is a wired this thing. Still the voice is not there.
No, sir. Actually, it's very feeble.
Now, sir.
Yes, sir. Now it's audible.
Yeah, thank you. Is my screen visible?
Yes, sir.
Thank you. Welcome you all for this GSTR 9 deliberation. We will be discussing on the following. One, what is GSTR 9? Who has to file GSTR 9? Who is not required to file GSTR 9? And what is the due date? What is the late fee in case if there is a delay in filing GSTR 9? In many of the cases, it may so happen that the client may, get their registration cancelled. Now the question arises whether GSTR 9 has to be filed for them, even though in case if their registration is pending before the authorities and when they have applied for surrender. Now, what are the prerequisites for filing GSTR 9? What documentary evidences we need to have before we undertake, to carry out the compilation of GSTR 99C and filing of returns. Now, what are the parts of GSTR 9? And when is that, we can file nil GSTR 9? And what is the process for filing GSTR 9? And we can see few of the FAQs. So basically, if you see the structure, I have contended only the extent of GSTR 9. In tomorrow's deliberation, we will see the interplay between GSTR 9 and 9C. So the question is, when we have got GSTR 1, GSTR EV, why another return, GSTR 9? If you recall, or in case, VAT regime, so what was a monthly return, was an option compile annual return. So this annual return has to be physically signed. It will be collated in the portal, but it has to be physically signed by the dealer and has to be submitted with the authorities. The reason why under VAT regime this annual return was being introduced is that the authorities, when they do the assessment, it is for full 1 year. So therefore, they wanted to compile the information so that they will be able to compare with the financial statement. So that is the reason there is a requirement to file the GSTR 9. Another important aspect that we need to take into consideration here is that it is the consolidation of all the monthly returns. It is a consolidation of all the monthly returns, is GSTR 1, 3B. And GSTR 1 and 3B for the financial year must be filed before we file. It is a prerequisite that all the returns for the year has to be filed. Is this GSTR 9 consists of sales turnover, input tax credit, other details like refund claimed, refund rejected, demand raised. So all these things along with HSNs, all these things will be covered in the GSTR 9 returns. Is the purpose satisfied with regard to Sana, are you able to see the screen?
Yes, sir.
It is moving, no?
Actually, no, it is stuck in the first page, GSTR 9 annual filing. Yeah, now it's visible. All good, sir?
Hello, Sana. Are you able to hear now?
Now I am able to hear.
Should I start once again in case if audiences are finding it difficult, in following it?
Just a few slides back, you can actually start, sir. They were following actually. I think from slide 2 they missed it. So,
Okay.
or you can continue with the present slide.
Okay.
Yes, sir. Yes, sir.
Thank you. So as I mentioned, this GSTR 9 is going to help department in reconciliation in the returns. You see the returns, it is a monthly return. And also it is a self-assessment. Every time when we file the return, it is deemed as it is a self-assessed until and unless there is a notice from the department for carrying out the verification of the returns or any order is being passed. So once GSTR 9 is filed, it cannot be revised. So therefore, you have to be very careful while filing GSTR 9. The reason why it is important here is that whatever the GSTR 9 is being filed, that will be taken for the purpose of assessment. In case if GSTR 9 filed is erroneous or there is a mistake which is been there, then the department may invoke section 74 instead of 73, that is suppression of information fraud. And therefore, there will be a enhanced levy of penalty on the assessees. So therefore, it is very important for us to ensure that there are no errors in the GSTR 9, what we are filing. Now, this GSTR 9 is to be filed for every GSTN, even if it has got a nil turnover. Just to give a couple of examples. Now, we have got a entity which has got two branches. That is one in Karnataka, another one in Tamil Nadu. In Karnataka, there is a turnover of say 10 crore. In Tamil Nadu, there is no turnover. At for the Tamil Nadu locations, we have to file GSTR 9. So kindly ensure that when you check the number of distinct entities, once if GSTR 9 is applicable to any of the entities, then it is applicable for other entities also. Kindly file the returns even if it is nil return. Otherwise, there will be a penalty which will be levied. We will see in the coming slides. This annual return is a last chance for rectification of mistake. Sometimes, as we are aware that GSTR 1, GSTR 3B, we don't have an option to revise the return. Only we can make necessary changes in the subsequent months by way of an amendment. So therefore, in case if those rectifications could not be made till the specified date, kindly ensure that it is been properly disclosed in annual return so that you can safeguard or overcome from the provisions of section 74 and you can be assessed under section 73, which will enable you to lesser penalty. Now, who should file GSTR 9? Annual return is mandatory to be filed if the aggregate turnover is more than 2 crores. So up to 2021, so it was an optional. Post that it is exempted in case if the aggregate turnover does not exceed 2 crores. We will see it in the coming slide. Now the question arises, in case if the turnover is less than 2 crore, can we not file the GSTR 9, or is there any scenarios where we have to file even if the turnover is less than 2 crore? The answer to this question is that wherever the auto-populated GSTR 9 is not matching with the books of account, then in that case, you have to ensure that GSTR 9 is filed so that the errors and omissions can be rectified by way of GSTR 9. What is the returns in which GSTR 9 has to be filed? There are different persons who are required to file different GSTR 9 returns. So in case of registered person is GSTR 9. For composition taxpayer, it is GSTR 9A. For e-commerce operator, it is GSTR 9B. As I told that, this previously up to the financial year 2021, it was optional. Post 2021, it is exempted. That is for the financial year 21-22. It is exempted in case if the turnover is less than 2 crore. So previously, they could have opted to file the GSTR 9 voluntarily. But after that, there is no requirement. As I told, in case if there are any error or omission, then in that case, it can be rectified by filing GSTR 9, even though the turnover is less than 2 crore. This needs to be kept in mind. Now the question arises whether all the registered taxpayer is required to file GSTR 9, or are there any exception from filing GSTR 9 for any registered person? So as you can see from the slide, following category of registered persons are not required to file GSTR 9. Who are those? One is casual taxable person, in-service distributor, non-resident taxable person, person paying TDS and TCS, and OIDR service providers who is situated outside India and they are registered in India. Also, the central government, state government, or local authority whose books of accounts are audited by a Comptroller and Auditor General of India, or are treated any other law for the time being in force. So these are the registered.
Hello, sir. You're not audible, sir.
No, Sana, now are you able to hear?
Yes, sir. Better, sir.
Yeah.
Fine.
Thank you. So the following persons are not required to file their GSTR 9. So what is the due date to file GSTR 9? As we are all aware that 31st December of the subsequent financial year is the due date. Now for the financial year 22-23, 31st of December 23 is the due date within which GSTR 9 has to be filed. Now, what if the GSTR 9 is not filed within the due date? Now, the late filing fee is, in case if the aggregate turnover is up to 5 crore, it is rupees 50 per day, or 0.04% of the turnover in the state or union territory. This is the maximum amount, which will be a penalty for non-filing of the returns. Now they have bifurcated the turnover up to 5 crores, between 5 crores and 20 crores, and about 20 crores. So in case if the turnover is between 5 crores to 20 crores, the late filing fee is rupees 100 per day, or 0.04% of the turnover. This is the maximum amount. In case if the turnover is more than 20 crore, then in that case, it is 200 per day, which was previously existing prior to the amendment, or it is 0.5% of the turnover in the state or union territory. Now the question arises is that, is GSTR 9 required in case GST registration was cancelled before 31st of March? The answer is yes. In case if every registered person is required to file GSTR 9, even if he is not registered as on 31st of March. What does it mean? He was registered taxpayer during the financial year. If he was a registered taxpayer during the financial year, and subsequently he has applied for surrender of the GST, then in that case, he has to file GSTR 9. Similarly, if somebody has applied for the cancellation of registration, but his application is pending as on 31st of March, he needs to file GSTR 9. So kindly ensure that if any application is being filed, but it has not been, order has not been passed for, cancellation of registration, then in that case, GSTR 9 has to be filed. Before we go into the prerequisite, that is with regard to the documentary evidences, I would like to, bring to your kind attention certain things. When the departmental authorities take up any case for audit, they need to compare the GSTR 9 and 9C, the returns along with financial statement. So therefore, when we are taking into consideration the assignment of GSTR 9 filing, we need to have the following documentary evidences. One is audited financial statement, along with notes, schedules, etc. So here we need to take into consideration the director's report, auditor's report, and also take note of any of the observation. Sometimes there might be a situation that the directors have taken a call to discontinue the businesses, in the short run. What I mean to say here is that they have taken a call that they want to discontinue the business. So in those cases, you have to be extra cautious with regard to treatment that is being given in the annual return, GSTR 99C. Because sometimes what happens, they may write off the stock. So ITC reversal, all those things needs to be taken into consideration if it has not been given effect in the books of accounts. Now, bank-wise trial balance. So this is important where you have got a distinct entity. As I have taken the example of Karnataka and Tamil Nadu. The authorities are interested in the distinct entity-wise trial balance and financial statement. I have not included the financial statement because many of the entities do not prepare the financial statement branch-wise. At least they will be able to provide the trial balance, which will face the purpose, to defend whatever the GSTR 990 has been filed for a particular location. Further, we need to take into consideration income tax returns along with copy of 20 AS statement. Now the question arises, why income tax return? Under service tax, there was a memorandum of understanding in the service tax authorities and income tax authorities to exchange the information. So the income tax authorities used to exchange the information with regard to IT returns, the service tax authorities, based on which the service tax authorities were able to send notices where the turnover is more than 10 lakh, based on which we're able to recover the taxes from the unregistered persons who have not complied with the provisions of the Finance Act. So this was a kind of a cross verification where the service tax authorities were able to, do.
Sir, again, not audible currently.
Just give me because I'll try to connect with this.
Hello, sir.
Hello. Hello.
Yes, sir, you weren't audible, sir.
Should I repeat this? I'm extremely sorry. I do not know what is happening.
Yes, some 10 seconds or something.
So I'll start from the beginning of this slide.
Sure, sir.
Need to have the following documentary evidences before we start with the assignment of GSTR 9. One is audited financial statement along with notes and schedules with director's report as well as auditor's report. Kindly go through the director's report or the auditor's reports for any adverse comment or observations, which has got an implications on our GSTR 9. Further, kindly call for the trial balance in case if the entity has different distinct entity. The example what I have taken in the initial stages, that is ABC Limited has got two branches, one in Karnataka, another one in Tamil Nadu. So kindly ask for a trial balance branch wise so that that will become a basis for you to prepare GSTR 9 for distinct entity Karnataka as well as Tamil Nadu. Further, you need to ask for the income tax returns with copies of 26 CA statement. So the question arises, why we need to have income tax returns and copy of 26 CA statement? There was a memorandum of understanding between Income Tax Department and Service Tax Department for the exchange of information of the assessees which are available with the Income Tax Department with Service Tax Department. In this exercise, the Service Tax Department were able to issue notices to the assessees whose turnover is more than 10 lakhs, but who has not taken the registration, point number one. Point number two, they were able to send notices to assessees whose income as per the income tax return was more when compared to service tax return. They were issuing notices for calling for reconciliation between income tax return and service tax return. Now, in this process, it becomes important to compare the income tax return with 26A's statement and also the ST3 returns. So similarly, the same thing has been extended with GST also. Till today, we were not able to see any such notices, but in the days to come, there will be notices issued when they compare the income tax returns with GST returns. Though that information is already available in the income tax portal 26A statement, you will be knowing the turnover, GST turnover. Now, the vice versa, they will be comparing the GST turnover with the income tax turnover. Certainly will question why the differences between these two returns, and reconciliation has to be provided. So it is essential you to have a reconciliation before you proceed with GSTR 9C. Now we need to have the books of account, either it may be a Tally, QuickBooks or Zoho, whatever is. You need to have access to the books of account. Further, there are other records such as cost records or corporate records, if any. These things are essential because you have to go through these records, and as a template or a checklist, the departmental authorities will ask for these cost records and corporate records in order to find out any other observations which will have an implications on the GST returns. Further, you need to have a GSTN login ID and password, because many a times you need to pull the information from the portal, such as previous year annual return. Now current year GSTR 1 3B. You need to ask for GST 1 3B workings along with the supporting documents.
User ID password GST portal previous year annual returns current year GSTR 1 ಏನ ಜೂಮ್ ಮಾಡಿ GSTR ಅದ್ರಾಗ ಏನ್ ಮಾಡಿದೆ ಅದ್ರಾಗ ಐತ
Talking at the background. Hello.
Yes, sir.
Hello.
Yes, sir.
Are you able to hear, Sanu?
Yes, sir. Now, yes, sir.
We need to download GSTR 1 3B summary report from the portal. And also we have to download GSTR 9 system computed summary. Along with that, we need to have electronic credit ledger, electronic cash ledger, details of refund applications filed, sanctioned, and ordered passed for any demand raised. Now, we are seeing many notices has been issued with culmination order. So those orders also has to be
Sir, you're not audible again, sir.
Now, are you able to hear? Sana, now are you able to hear? Hello?
Sir, your voice is gradually reducing, sir, after every 5 minutes.
Oh. Just, but inform me in case if you find any, this thing, low voice, so that, I'll try to connect to another this thing.
Sumitra, you check your internet, no? If that is the case.
Okay.
Not audible, sir.
Sumitra, problem with you, I believe.
Yes, sir.
Hello, Sumitra.
Yes, sir.
I think so. Problem with you. You are not able to hear. You check your internets and all.
No, sir, there are other students. They also told here.
Acha, acha. Veeresh, can you please kindly check it out from your side?
Yeah. So internet is okay. There is no issue at all. Now, are you able to hear? Hello? So now we'll see what are the parts of GSTR 9. There are 6 parts, 19 tables, and there are components of table which will give certain informations. Now, with regard to part 1, there are 3 tables which captures basic details. We will see what are those basic details. Now, part 2, which consists of 2 tables, 4 and 5, which will give us the liability turnover as well as the liability for a particular financial year, that is 22-23. Part 3, table 6 to 8, which will give the details or capture the details of ITC. Part 4, table 9, this will capture the details of taxes paid for the financial year 22-23. Part 5, which consists of table 10 to 14, these are all adjustment which has been taken place pertaining to the financial year 22-23, but disclosed in 23-24. So, and the liability, what has been discussed in that. Part 6, from table 15 to 19, which captures other information such as HSN, details of invoices, and other stuffs. Coming to the part 1, that is basic details, financial year, GSTNs, all these things are auto-populated. Legal name, trade name, etc. For legal name and trade name, you have to refer to GSTR registration certificate in which it will be captured. And moreover, it is a auto-populated, so no need to take any actions. But only thing is that you need to have a registration certificate as a documentary evidences. Now, coming to the subsequent part 2, that is details of outward and inward supplies made during the financial year. Now, here in this part, this will capture advances, details of advances, inward and outward supplies made during the year. The important aspect that we need to take into consideration here is whatever the transaction we are capturing in table 4, on which tax should be payable. In the subsequent table, that is table 5, similar transactions on which no tax is being paid, only those things has to be captured. We will deliberate it when we come to the subsequent slide. So what are the fields that we need to capture here? That is B2B, B2C transaction, whenever the transaction is with an unregistered person, those information has to be captured here. There are references with regard to R1 table references, which has been given here. That is table 5. Table 5, 7, 9A, 9B, 9C, and 10 has to be referred for the purpose of filling this B2C column. Now, B2B, we need to refer to table 4A and 4C of R1, that is GSTR 1. Exports with payment of tax. With regard to export, there are two options. One is you can export the goods or services with payment of tax, and another one is with you can utilize the LUT and export as a zero-rated supply. So only the transaction on which tax has been paid that has to be reported under clause C. Similarly, SEZ can also be supplied without payment of tax and with payment of tax. Only with payment of tax has to be captured in this table. Now there is a deemed exports. So normally deemed exports are those where the supply is made against advance authorizations, or it may be export promotion capital goods authorizations, or any supply made to an export-oriented unit, or supply of gold against advance authorizations by the bank, are all covered under deemed export. Further, advances on which tax has been paid, but invoices has not been issued, that needs to be captured, and these informations we can refer from table 11A. Now, in case if any advances are there, but on which invoices has been raised, to that extent, it need not be disclosed under column F. I have highlighted column G in red color. This is an inward supply on which tax is paid under RCM. Now, for this, we have to refer to GSTR 3B, 3.1D. The summation of from A to G will be auto-populated in column H. So this will give us the turnover on which tax has to be discharged. Now, the subsequent column captures with regard to credit note, debit note, any amendments with regard to positive or it may be negative. All these things will be captured as a individual column wise. The subtotal I to L will be either positive or negative. And in the column N, that is, we will get total supplies and advances on which tax is to be paid. As we have seen that in column A, that is with regard to unregistered person, you have to take into consideration the turnover net of debit and credit notes or amendments. So this is an example. In case if there is a taxable supply made to URP in the month of November, 1 lakh rupees, and if credit note is being issued, and also there is an amendment, the net figure has to be keyed in column A. But whereas from column B onwards, the debit note, credit note amendment has to be captured separately and not on a net basis. So this has to be kept in mind. Now coming to table 5. Table 5 deals with outward supply made during the financial year on which tax is not payable. There is an export where you utilize the LUT and make it 0 rated. So those transactions will be reported in this table. A and B is with regard to SEZ. Now with regard to C, that is supplies, tax is paid by recipient on the RCM. Just to give an example, in case if an advocate is there and the taxes on which has to be paid by the recipient, that turnover will be captured in column C.
Sir, are you on slide 10?
16. I'm at slide 16.
The slide is stuck over here on 10th.
Just 1 minute. I'll stop this thing and then.
Sunny. Maharaja 10 times.
So now are you able to see the screen? 16, it is in slide 16.
Yes, sir. Yes, sir.
Okay. As I was referring to with regard to the advocate services on which the tax has to be paid by the recipient, that is, say, for example, ABC Private Limited is there. In case if they avail the services of the advocate, the taxes has to be paid by the ABC. So here the advocate will disclose the turnover under column C. Column D, we have to disclose the turnover which is exempted under GST. And column E is with regard to turnover which is subjected to nil rated tax. Column F, they have to disclose the non-GST supply, which also includes no supply, that is as per Schedule 3 of CGST Act. So there are transactions which has been covered under this. Now, under column G, it is a subtotal of A to F, which is auto-populated. With regard to the credit note from A to F, this field is optional. So either you can show it as net of credit note in the respective field, that is from A to F, or you can show the credit note separately in column number H. Similarly, for debit note, you can show the transaction net of debit note in the respective fields, or it can be shown as a debit note distinctively. But however, it is always advisable to have a details, because when the assessment is being undertaken by the authorities, they ask for the details. They don't go by the informations what is being captured in GSTR 9. For each field, the details has to be provided and documentary evidences has to be given. Similarly, any amendments from A to F, it is optional that it can be captured net of amendments in the respective column, or it can be shown distinctively in amendment positive column. Similarly, negative columns also, it is optional. So the subtotal from H to K is auto-populated. We'll get the turnover on which tax is not paid, which is also an auto-population. And the total turnover will be auto-populated. So this includes both the turnovers, that is taxable as well as exempted. However, we need to take out the RCM turnover, which is under reverse charge mechanism for the purpose of comparing with your financial statement. Now coming to the table 6, here we capture the informations with regard to ITC availed during the financial year. So whatever has been captured in the GSTR 3B, it is auto-populated. You cannot amend or make any changes in these fields. This needs to be compared with ITC other than import RCM. Here it is optional. Either you can show input services and capital goods distinctively, or you can show input services under input itself, but capital goods and inputs are mandatory fields. Only input services is optional. Similarly, with regard to unregistered person on which tax has to be paid and ITC is availed, this is currently it is applicable only to the works contractor where they are promoters and where their purchases is less than 80% from the registered dealer. Those transactions will be captured here. And once again, it has to be bifurcated between input capital goods and input services. Similarly, RCM from registered persons on which tax paid and ITC availed has to be disclosed in field D. RCM on import of goods and supplies from SEZ will be disclosed here. So references has been given with regard to table, from GSTR 3B. Now coming to RCM on import of services, this excludes SEZ supplies. This needs to be taken into consideration. And ITC received from ISD. In case of input service distributor, they normally distribute the ITC to their entities of the same PAN. So that ITC has to be captured here. And ITC reclaimed. There are scenarios where ITC can be reclaimed. For example, in case if ITC has been reversed, where payment to vendor is beyond 180 days, based on the payment of taxable value along with tax, ITC can be reclaimed and it can be disclosed under column H. The subtotal B to H will be an auto-population. The difference, that is I minus A, ideally it should be 0. But in case if it is not 0, you have to evaluate and give appropriate adjustment. In case if there is a excess ITC availment, then in that case, it has to be reversed. Column K tran 1, currently this particular column is not very relevant because many of them would have filed their tran 1 returns. So there will not be any items. Similarly for tran 2 also. Now any other ITC availed not specified has to be disclosed here. What are those? ITC 01 and ITC 02. That is where you have got a registration within 30 days. Any ITC which has been, the vendor has charged prior to the registration can be claimed by this ITC 01. And similarly, ITC 02, whatever the ITC is there, that has to be claimed in this column. So column N, which is a subtotal, K to M, which is an auto-populated. So the total summation of this table, the result will be total ITC, what we have availed by way of GSTR 3B. Now coming to table number 7, details of ITC reversed and ineligible ITC for the financial year. Now, this table will list out the ITC which has to be reversed. One is section 37. Here we have to reverse the ITC in case if the payment to the supplier is not made within 180 days from the date of invoice. Question may be asked, for example, if there is a credit period, say for example 270 days, whether we have to still reverse the ITC? The answer is yes, because it is not based on the payment terms, but they have specifically mentioned that 180 days. Of course, this can be litigated at a higher form in order to get any relief, but certainly the matter has to be taken up to either High Court or a Supreme Court to get any relief. Now, section 39 speaks about the credit note issued by the ISD. In case if the input service distributor has, transferred higher value, and if that needs to be reversed by way of a credit note, that amount will be disclosed under section 39 under clause B. Now, under clause C, this is a reversal of common ITC and other than business purposes. So take a scenario that you have got a exempted turnover, or if there are ITC which has been used for the personal purposes. So then in those cases, the ITC has to be reversed under, rule 42 and 43. 43 is with regard to capital goods, whereas 42 is with regard to input and input services. So proportionate ITC with regard to exempted turnover has to be reversed. Section 17.5 block credit, such as in staff welfare, by car hire or works contract, either it may be carried out by self or it can be given on a contract basis. Both are not eligible. Similarly, in case if it is a vehicle, if it is less than 13 seating capacity, ITC has to be reversed. Expenditure incurred with regard to insurance, repairs, all those things are not eligible with regard to motor vehicle. So those has to be reversed under section 17.5. Reversal with regard to Tran 1 credit, both F and G are not relevant as far as the current year will be there. Now, other reversal has to be specified under column H. Now, ITC reversal through ITC 03. So this has to be reversed here in case of compositions. So that has to be disclosed here. And also it is a optional. So you can disclose entire reversal under the respective things, or it can be shown separately. So it is an optional field. So total ITC reversed is an auto-populated thing. And the last column, that is column J, will reflect the net ITC available for utilizations. So this is very important field for us, because we need to take into consideration what is the ITC available or means utilized for the current financial year. Now there is a table number 8, which captures informations with regard to other ITC related informations. That is ITC. Here we are comparing with 2A. Now, as you have seen that many notices has been issued where they compare the 2A figures with ITC what has been availed. And then for this financial year 17, 18, 18, 19, there is a provisions in case if we are able to get the declarations from the vendor, we are eligible to claim the ITC. But for subsequent period, there is no such provisions. So now we have to invariably take a position that we have to match with 2A statement and then carry out GSTR 99C. If, for example, if any of the assessee who does not take into consideration GSTR 2A has a basis for the purpose of filing their GSTR 3B returns, they are surely going to get notices from the department for the mismatches. So therefore, we have to take into consideration this reconciliation is being maintained, and we have to be well within the limits. Now, ITC as per 6B and 6H above is an auto-populated, and under column C, we include ITC with regard to, including services received from SEZ, other than imports, RCM, but availed in next financial year up to specified date. So the difference will be the ITC, which is also an auto-populated figure. Now, this table gives the informations with regard to ITC, which has been lapsed during the year. So column E captures ITC available, but we have not availed. For example, it has been accounted in the books of account, but has not been claimed in 3B. And we have, crossed the specified date within which ITC has to be claimed. So in those cases, those information has to be provided here. Or ITC available, but is ineligible. So in those cases, the information has to be, distinctly captured under the respective fields. IGST on import of goods, including SEZ supplies, has to be reported under column G. And column H, that is IGST credit availed on import. Now, whatever has been paid, how much we have availed on that has to be given here. And this is an auto-populated field, captures from 6E above. The differences, that is G minus H, is also an auto-populated figure. Now, ITC available, but not availed on import of goods. And finally, we will get the figure ITC to be lapsed in the current financial year. One important fact that needs to be taken into consideration here is GSTR 9, please don't think that it is a year-end activity at the time of filing GSTR 9. We have to carry out this activity on a month-on-month basis. Plus, we need to have the details year-to-date information, such as whatever the ITC we are claiming. Is it matching with my electronic credit ledger? And this has to be mapped on a month-on-month basis. Further, for the subsequent period where the transaction is reflected, which is pertaining to the previous year, but reflected in the subsequent year, also needs to be taken into consideration. So that at the time of filing GSTR 9, we have all the informations readily available for the purpose of filing GSTR 9, so that no error, omissions are there in our returns. Otherwise, it will invite, higher penalty. That is section 74. This table captures the informations with regard to taxes paid during the financial year. So whatever the tax payable is there. However, I have captured few of the example in the coming slides where we will see in case what will happen if the transaction for the particular financial year has not been captured in GSTR 1 3B, and also in the subsequent period, that is from 1st of April till 30th of November 2023, where it has to be disclosed. Now, whatever the taxes has to be paid, it will be auto-populated here and paid through ITC. All these information is being captured in this field. This table is very important. As you know that GST is unique in its own way, unlike VAT, where we had an opportunity to revise the return. Even under service tax, we had an opportunity to revise the service tax return, that is ST3. But however, in GST returns, we don't have that option. It is only by way of an amendment or correction in the subsequent period. So therefore, it may so happen that the transaction pertaining to the previous year are disclosed in the subsequent period. Previously, it was up to the September, the option was being given to capture the information. Subsequently, they have extended up to 30th of November. So all the transaction pertaining to supplies where the taxes is disclosed or declared in the subsequent period, including the debit notes, has to be captured in table number 10. Table number 11 is with regard to reduction in the turnover or disclosure of credit notes pertaining to the previous year, has to be disclosed under table number 11. Reversal of ITC availed during the previous financial year. So this table is optional. You can give here the informations or it need not be reported here. Similarly, ITC availed for the previous financial year is also optional. But I would recommend that please do not use this optional field because GSTR 9 will have its own relevance as far as assessments are concerned. The reason being is that the authorities rely on GSTR 9 for the purpose of GST audit. So in case if any optional field is been opted and information is not captured in GSTR 9, it becomes an Herculean task for you to prove to the authorities the informations with regard to reversal, because then you have to have the workings in hand to prove that this information is been properly captured. If it is been distinctively disclosed under table 12 and 13, it becomes easier for you to explain to the authorities. Table 14, we are disclosing the differential tax paid on account of declaration in table 10 and 11. So it is a liability which is being discharged in the subsequent period. That is subsequent period from April 23 onwards up to 30th of November 23. In case of exports or SEZ supply or inverted duty structure, the assessees opt for refunds. So in case if they file the refund applications, they have to take into consideration the refund applications filed for the financial year. Now, when we are doing the GSTR annual return for the financial year 22-23, we need to take into consideration the refund application filed for the financial year 22-23, and the information in this table should be disclosed based on the applications filed. Now, the total refund claim, all the fields from A to G are optional. However, based on the refund applications filed, these fields can be filled. When a refund application is filed before the authorities will verify the applications and sanction. The refund amount may be sanctioned for the full amount, or it may be sanctioned for a partial amount, wherein if they find based on the 2A statement or input credit statement provided by the assessee, any ineligible ITC has been claimed, they will reject the ITC pertaining to ineligible ITC or blocked credit and sanction for the refund remaining balance. So here we have to mention the amount of refund sanctioned as per the order. And there will be a refund rejection, as I told, with regard to ineligible ITC or blocked credit. Those information has to be keyed in column number C. Many a times it may so happen that you file the application and application is still pending because the department has got a time limit within 15 days to acknowledge the applications and within 60 days to process the refund applications. In case if the refund application is pending, that information can be keyed in this column number D. There are scenarios where show cause notices is being issued to the assessee and Based on the reply received from the assessee, the department would have confirmed the demand by way of an order. So in case if any order is being received, you have to provide those information under column E. Out of the demand raised, there may be a situation that in case if you are filing an appeal, there would be a pre-deposit, or you may agree for the demand certain paras and discharge the tax liability against the order for certain paragraph. In those cases, those has to be disclosed in column number F, that is total taxes paid under E above. Column number G reflects the demand which is pending out of total demand raised by the department. It is essential for you to kindly go through the notices issued. Sometimes the department may also issue notices to the email, but it is not there in the portal. Please don't be, very casual in case if notices are not there in the portal, that there is no notices issued for a particular client. Kindly check with the management, are any notices received physically or through email, and what actions has been taken, against those notices. Call for the reply letters, and finally, ask for the status of those notices, whether the department has issued any further communications, asking for any informations, whether there is a time limit which has elapsed. In case if the time limit is being provided, say 30 days, and if no reply is being submitted, there are possibilities that the department may confirm the demand. So please ensure that you reach out to the assessee's management and check out for these information, though it is optional. But the thing here is correct position with regard to the liability cannot be provided if you do not obtain the informations relating to these details. Now, table number 16, it is only for the disclosure purposes. Here, information on supply received from composition taxpayers deemed supply under section 143 and goods sent on approval basis. So the GST department wants to capture the information with regard to supplies received from composition taxpayer. They have got a analytics for which these information is being captured, so that they try to see how much is the composition taxpayer turnover is there. With regard to the deemed supply, that is under section 143, this scenario will raises when the principal sends out the input and capital goods to the job worker. With regard to input, the time period given under the GST provision is that within 1 year it has to be received back. And with regard to the capital goods, the time period allowed is 3 years, excluding jigs fixtures. For that, there is no time limit. So in case if any goods have been sent out to the job worker, and if it is not being received within a period of 1 year with regard to inputs and capital goods within 3 years, then that information has to be captured in this column. Similarly, there are scenarios where the goods will be sent on approval basis. Here, what happens? For example, the daily products, for example, batters, these things will be, sent on an approval basis to the kirana shops or the malls. And in case if they don't receive the goods within 180 days, then in that case, that will be treated as a supply from the date of invoice or from the date of dispatch of goods, and they have to pay interest along with the tax. So those information is captured in GSTR 1 and 3B. Here it is only the disclosure aspect. This is very crucial things. As far as outward supplies are concerned, HSN detail or SAC detail has to be provided. Many a times it may so happen that though the assessee's turnover is more than 5 crores, but yet they are not capturing these informations in their GSTR1 return. When it comes to the supply of goods, they need to have a unique quantity code, total quantity, and rest other information has to be captured. It may so happen that when it comes to the goods, many of them, they don't have the quantity details. Wherever it is possible, kindly insist for a trading account along with the quantities. This is going to help at the time of GST audit. Similarly, HSN-wise summary for inward supply. However, it is optional. But in case if the information is available, kindly ensure that these are all informations to be captured in GSTR 9. This will help you at a later point in time. This chart gives the digit of HSN which has to be captured in GSTR 1 and GSTR 9, where the registered person's aggregate turnover in the previous year is up to 5 crores. The total digit to be captured is 4 with regard to B2B supply. As far as B2C supply is concerned, it is optional. Where the registered person's aggregate turnover in the previous financial year is more than 5 crores, they have to capture 6 digit. And here it is mandatory for both B2B supply as well as B2C supply. However, for certain chemicals and import and export of goods, it is mandatory to capture 8-digit things. The reason being is that the customs there, the informations with regard to HSN to be captured is 8-digit. So therefore, under GSTR 1 and 3B also, they need to capture 8-digit. We come to the last table, that is with regard to late fee payable. This will come into picture only in cases where GSTR 9 return is not filed within the due date. Now, in case if we fail to file the GSTR 9 within 31st of December 2023, then late filing fee is applicable. And in case when you are filing the GSTR 9, kindly compute the late filing fee and file the GSTR 9 along with the late filing fee so that you can avoid future notices. I believe now it is computed by the system itself so that you don't have an option. Previously, in the previous year, there was this late filing fee was not been populated. So therefore, many of the assessees were not filing the not paying the late fees in case of delay in filing GSTR 9. Now, this table will give you a snapshot. What is the relevance of each table? In order to arrive at the total turnover, we need to take into consideration table number 4, that is turnover with payment of tax. This also includes ITC turnover. We have to be very careful. But however, when you take into consideration the summary of table 4 and 5, that is total, the RCM turnover will be eliminated. So table 4 plus table 5 and plus table 10 minus table 11 will give us the total turnover and the total tax liability. Now, how do we arrive at the total tax liability? As you are aware that table 5 captures only where there is no tax, or either it is zero rated supply of exports, LUT with SEZ turnover, or exempted. So therefore, that is not taken into consideration. Table 4 plus table 10 minus table 11 will give us the total tax liability. Now, with regard to input tax credit, we have to refer to table 6 minus table 7. How do you arrive at total tax payment? That is with regard to table number 9, where the taxes has been paid in GSTR 3B for the financial year. And table number 14, the taxes paid in the subsequent financial year, that is from 1st of April 2023 up to 31st of December 2023. And also we need to take into consideration DRC 03 in case if the turnover is missed out to be disclosed in the current financial year or subsequent financial year. That we will take into consideration with the help of an examples. Now the question arises, in case if the transaction is not been reflected in a particular financial year, under which table this needs to be disclosed. Now taxes paid in 3B up to March 2023. So invariably you have to disclose those information in table number 4. In case if the tax is being paid in 3B till November 23, so information has to be reported in table number 10 and 11. So any balance tax payable is there, it has to be paid through DRC 03. Now, in order to summarize what we have discussed, this is the summary. If one, goes through these things, they will never miss out any, informations in capturing in GSTR 9. So outward supply made during the financial year, you have to capture this information in table number 4, and table number 5 is with regard to tax payments. Now, outward supply for the financial year 22-23, but reported and tax paid in subsequent financial year, we have to refer these informations in table number 10 and table number 14. So either it may be an adjustment in outward supply with regard to financial year 22-23, but made adjustment and reported in subsequent financial year. The same table number 10 and table number 14 has to be referred to. In case if any adjustments with regard to negative things, then in that case, it has to be referred to table number 10 and 14 once again. So both these informations will be captured in the subsequent period. Now coming to debit note, credit note pertaining to the outward supply of the financial year 22-23, but made or reported in subsequent period, table 10 or 11 as the case may be. And table number 14 is with regard to tax payment for the subsequent period has to be captured. Now outward supply pertaining to the current financial year and reported and taxes paid in the same financial year 22-23, then in that case we have to refer to table number 4 and table number 9. This information has to be captured there. Now, any advances received in current financial year, but invoices is not yet raised or issued, then in that case, this has to be disclosed. There is a typo error, it should be 22-23. So this has to be reflected in table number 4 and table number 9. So table number 9 refers to the tax payment. And lastly, outward supplies of financial year 22-23, but not reported. As I told that in case if the turnover is not captured in GSTR 3B, then in that case, even though it is not been captured, it can be declared as an additional turnover in table number 4, and taxes has to be discharged through DRC 03. Now, with regard to inward supplies, that is ITC. So in case if it is during the financial year 22-23, table 6A, if it is reported in the subsequent financial year, then in that case, table 8C and table 13. If any additional things has been availed and reversed, then in that case, once again, table 8C and table 12. ITC pertaining to previous year availed during the financial year 22-23, table 6B and or table 6M, here reversal has to be done. Then ITC to be reversed for the financial year 22-23, but not reported in Form 3B even after 30th of November 2023 or not reversed at. Then table 7H and table 9. And ITC to be availed of financial year 22-23, but not reported in GSTR 3B even after 30th of November or not reversed at. So table 6B, this will be a lapsed ITC. Now we will see with example with regard to excess turnover reported. Obviously, we come across the scenario where we would have reported in 3B higher turnover when compared to GSTR 1 as well as books of account. So in this example, the turnover as per books of account is 1000. However, in GSTR 1, we have reported 900. In 3B, we have reported 1100. So when we compare, we come to know that there is an excess turnover declared in 3B and taxes also have been discharged accordingly. Now, the excess turnover has been reversed in 3B of subsequent financial year. So then in this scenario, how the reporting in GSTR 9 has to be done. In table number 4, we predominantly take into consideration the turnover declared in GSTR 3B as a basis for reporting in table 4. So you report the same turnover what is there in GSTR 3B for the financial year 22-23, that is 1100. And in table number 11, where it has been reversed in the subsequent financial period up to the specified period, this turnover has to be reduced. So the total turnover what we will get is the turnover as per the books of account. So there is no differences in the books of account versus the GSTR 3B versus GSTR 9. Now we will see the transactions where there is a short reporting in the current financial year. The turnover as per books of account is 1000. The turnover disclosed in GSTR 1 is also 1000. So there is no difference. However, in GSTR 3B for the current financial year, the turnover disclosed is only 600. In the subsequent period, they have only disclosed to the extent of 100 rupees. Still, there is a gap of 300 rupees. However, the moment when they came to know that there is a difference, they have paid taxes on 250 by way of DRC 03. So if you take into consideration, there are 3 turnovers as far as GSTR 3B is concerned. That is 600 rupees, which is being disclosed. The second one is disclosed in the subsequent period, which will find a place in table number 10. The taxes which has been disclosed in DRC 03, that turnover has to be disclosed in table number 4. And the turnover which has been left out, that is not reported, also should be reported in table number 4 itself. Now, if you take into consideration the total of table number 4, it will be 900 plus table number 10, 100. The total turnover will be 1000, which will match with books of account as well as GSTR 3B. This is how we have to take into consideration the reconciliation. Now we will come to ITC part. What happens in case if there is a excess ITC claimed in the current year? Now, ITC as per books of account is 1000. In 3B, we have claimed 1100. Now, when we are doing the monthly compliances for the subsequent period and reconciliation, we came to know that the excess ITC has been availed in the financial year 22-23. The same has been reversed in GSTR 3B. Now, under these circumstances, we have to disclose in table number 6, 1100. And in table number 12, reversal, we have to show it 100. We'll get a total ITC of 1000, which will match with our books of accounts. This is a scenario where we have short claimed ITC in the current financial year. ITC as per books of account is 1000. As per GSTR 3 for the financial year, it is only 800. In the subsequent period, we have claimed excess because after the close of the financial year, when we did a reconciliation, we came to know that there is a short claim of ITC in the GST return. So therefore, we have claimed 200 rupees in the subsequent period. So how it has to be disclosed? In table number 6, 800 will be disclosed. In table number 13, whatever we have claimed additionally in the subsequent period, it will be disclosed. The total ITC will be 1000, which will match with our books of account. Now we'll come to the situations when we have to file nil GSTR 9. Is it only that we need to take into consideration only outward supply or only the inward supply? If there are no inward supply, can we say that, okay, we can file nil return? There is no liability. There should not also be any liability of any kind. Further, we should not claim any credit during the financial year, nor we should have received any order creating any demand. So that is the reason when I was referring to the orders and demand, though it is an optional thing. In case if you file a nil return, then the department may come and say that though there is a demand order, but you have not reported in GSTR 9, so you have concealed the information. It is always better, kindly exercise this option very carefully, where the information is not proper or where you do not have the information available or cannot be collated because the assessee is not keeping the information in such a way that where you can collate the information as required by GSTR 9 tables. Only in those cases, and that too, after informing the client that in case if they are using the options, what are the risks that they are running, suppose that you can exercise this option. Otherwise, I would suggest that you kindly fill all the fields what has been given in table in GSTR 9 tables. Further, we should not even have claimed any refund. So, in conclusions, there should not be any outward supply. There should not be any inward supply. No liability. We should not claim any ITC, nor we should receive any notices or means not any order creating a demand, nor we have filed a refund application. Only under these circumstances, we will be able to file nil returns. Also ensure that wherever there are different distinct entities, though there might not be any turnover, please file nil return. Otherwise, it will invite late filing fee. Now we'll come to the process. What is the process adopted for filing GSTR 9? So you need to log into the system, navigate to GSTR 9 annual return. Then you have to, here it is very important before you start the process of GSTR 9 that you have the information GSTR 1 3B summary, GSTR 9 summary, and table 8A document details. And please compare that with the GSTR what you are filing. If there are any differences in the figures, please kindly verify on what account the differences are there and give adjustment accordingly. Otherwise, this will invite notices. Enter the details in various styles. For that, kindly refer to GSTR 9 and find that is summary, GSTR 9 summary. And wherever there are differences, kindly have a reconciliation for those tiles. Keep it in handy, because in case of any notices, you can produce to the authorities and save the client, from unwarranted demands. Preview the draft form GSTR 9 summary, compute liability, and in case if there are any delay in filing the GSTR 9, pay the late fee if any, and preview draft form GSTR 9 and file GSTR 9 with DSC or EBC as the case may be. Now we'll take into consideration few of the FAQs. Now, is form GSTR 9 required to be filed at entity level or GSTN level? As I told you, as far as income tax is concerned, though the entity may be having a single PAN and they are required to file one income tax return at the entity level, as far as GSTN is concerned, the entity may have the different GSTN within the same state, or it may have a different GSTN where they have got a registrations with other state. So we normally call it as a distinct entity. So as far as GSTR 9 is concerned, this has to be filed at the GSTN level and not entity level. So each GSTN registration has to be filed GSTR 9 return. If you have got 10 GST registration, for all the 10 GSTN registrations, you have to file GST 9 returns. Even if it is annual return, it has to be filed. Otherwise, it is treated as a non-compliances and late filing fee will be levied for delay in filing the returns. Now, can registered person edit auto-populated data from form GSTR 1 and 3B in form GSTR 9? Yes, you can edit auto-populated data from the filed GSTR 1 and 3B figures in GSTR 9, except ITC as per 3B or ITC as per 2A and details of taxes paid. The one which has been highlighted in red colors cannot be edited. These are all auto-populated and you cannot make any changes in this. So that is the reason you have to have a system before the end of the financial year, that is from Feb and March, you have to have a very close look. Kindly refer to GSTR now 2B, you have to invariably take into consideration for filing GSTR 3B. And at the same time, whether all the ITC has been accounted, there might be a situation that the vendor might have filed their returns, but however, the goods have not been received. Hence, you will not be able to claim the ITC in the books of accounts and also in GSTR 3B. So a reconciliation has to be maintained and claim ITC once the goods are received. We have to follow the provisions of law. It cannot be claimed just because it is appearing in 2B. Now, can additional liability not reported earlier in form GSTR 3B be declared in form GSTR 9? The answer is yes. Additional liability not reported earlier at the time of filing GSTR 3B can be declared in GSTR 9 and it has to be discharged through GST, means through DRC 03. Ensure you have to take into consideration the DRC filed for a particular financial year and have a reconciliation before you finalize GSTR 9. So collate the informations of DRC 03 filed. Either it may be on account of notices or it may be on account of any other reasons. Kindly take into consideration the remarks what has been given in that, and appropriate adjustment needs to be given in GSTR 9 returns. Now, can we claim or report any unclaimed ITC through annual return? The answer is big no. GSTR annual return, as far as ITC is concerned, It is only a disclosure things. It will not have any impact on your electronic credit ledger. It is only a disclosure. So therefore, you cannot claim any unclaimed ITC through DRC 09. So in case if you fail to claim the ITC in your GSTR 3B of the current financial year or up to the specified period of the subsequent financial year, the ITC will be lapsed. Many a times it may so happen that GST on RCM, particularly import of services, is being paid, but they fail to claim it in the GSTR 3B return. And they also fail to claim the same thing up to the specified period in the subsequent financial year, because of which, there will be a lapse. There is no mechanism to claim that one. So kindly ensure that there is a reconciliation statement prepared for all the RCM, what has been paid, and whether the same has been claimed in the GSTR 3B of the current financial year as well as subsequent financial year for which GSTR 9 is filed. Can we revise Form GSTR 9 after filing? The answer is big no. We cannot revise GSTR 9 return after filing. There are scenarios where, even GSTR 9, though it is a last opportunity to rectify the mistake, even that also are being filed wrongly. Now, what is the option available before the assessee in those cases? The moment when such situations is identified, normally what happens, it will go unnoticed. But the moment when somebody identifies that there is an error in GSTR 9, in those cases, identify the mistake, write to the authorities, the mistake and the treatment of the mistake with regard to payment of tax, reversal of ITC, whatever it is, and kindly write to the authorities and keep them informed along with the documentary evidences so that you can avoid penalty at a later point in time. There is a unique features as far as GST is concerned, that is DRC 03, where we declare the informations voluntarily. So in case if anything of that sort is there, kindly use this route DRC 03, give the appropriate remarks in DRC 03, which should be self-explanatory, so that the authorities, when they refer to DRC 03, they come to know the error, omission, mistakes, which is been rectified by way of DRC 03, and they give the benefits to the assessee. Another important thing that we need to take into consideration is that GSTR 9 does not allow us to key in any of the comments observations. We don't have that option. We have that option only in GSTR 9C, self-certification. So therefore, wherever the turnover is less than 5 crores and where there is no option to file GSTR 9C, in those cases, kindly ensure that GSTR 9 is self-explanatory. All the fields are being reported, even though they are optional. Please do not exercise the option. And then in case where DRC 03 is being filed, please give appropriate remarks, which should be self-explanatory, so that authorities can understand the reason for filing GSTR 03. Now, what is the primary source of data for declaration in GSTR 9? As per the press release dated 4th June 2019, GSTR 9 is driven by GSTR 3B for the simple reason that in GSTR 3B we pay the taxes. Hence, whatever has been disclosed in GSTR 3B, that will become a basis for us to report in GSTR 9. However, there are certain fields where GSTR 1 also is being referred to. In many cases we have seen, but predominantly GSTR 3B will drive our GSTR 9. We have come across many occasions wherein the RCM for a particular financial year has not been declared in the GSTR of that particular year, but declared in the subsequent financial year. Now the question arises, in which part of GSTR 9 the informations with regard to RCM which has been missed out has to be declared, whether it is in the previous year pertaining to which RCM liability was there, or in the year in which RCM liability has been discharged. As per the press release, it has been informed that RCM of the current year, in case if it is declared in the subsequent period, it will form part of GSTR of the next year, and it need not be disclosed in the current financial year to which it is pertaining. So it is based on the payment. In case if it is paid in the subsequent period, the RCM GSTR 9 has to be disclosed in the subsequent period and not in the current period. Now, output tax not declared in GSTR 1, and also it is not declared in GSTR 3B, but has been remitted through DRC 03, where it must be declared in GSTR 9. So as I said, whatever the turnover which has been missed out in the current financial year and also in the subsequent financial year, in those cases, it has to be disclosed in table number 4 of GSTR 9. This will result in a difference between tax payable and tax paid in table number 9. Now, table number 9 predominantly takes into consideration the liability what has been discharged in GSTR 3B for the current financial year. These differences, the liability, whatever is shown, it has to be matched with DRC 03. So whatever the difference is there between these two, for that you should have a DRC 03 so that you can have a reconciliation. So even though in case if you have missed to report it in GSTR 1 3B, and if you are able to identify such missed out transaction at the time of filing your GSTR 9, even post 30th of November, please include it in GSTR table 4 and discharge the liability through DRC 03. Please don't ignore this turnover. Ensure that it is been properly captured. Now, with regard to GST portal, it is not auto calculating late filing fee. This we came across in the previous period, but I think in the current financial year it is auto populated. So accordingly, without paying fees, you cannot proceed further. So therefore, only thing what we wanted to highlight here is, in case if there is any late filing fee, kindly ensure it is appropriately paid before filing the GSTR 9 so as to avoid the notices. Now I would like to conclude with certain points, which everyone has to take into consideration before, carrying out the filing activity of GSTR 9. Point number 1, GSTR 9 is a final opportunity for the assessee to rectify the returns wherein the errors are there. Either it may be pertaining to the current financial year or the financial year subsequent to the current year up to 30th of November 2023. This is point number 1. Point number 2, you don't have an option to rectify the errors which is there in GSTR 9. So therefore, ensure that it is being verified. There is a maker and checker concept so that the one who has prepared it can be checked by another team member so that any errors can be identified and rectified before filing the GSTR 9. The third thing, it will act as a reconciliation statement between the books of account and the GST return. So ensure proper reconciliation is being carried out before you file the GSTR 9. Fourth, it will be a basis for the departmental authorities when they take up the GST audit, departmental audit. So in case if the assessee makes a proper disclosure, that will safeguard them so that there will not be any unforeseen penalty or notices either under section 73 or under section 74, which also invokes penalty at the rate of 10% or 15% or 25% or 50%. It all depends upon the stage at which you accept the liability and discharge along with the penalty. So therefore, it will be an added burden to the assessees. We, as a professionals, we have to help the assessees so that they can overcome these unforeseen events. And finally, you have to have all the documentary evidences. I would like to touch upon certain important aspects. Many times we ignore agreement copies with regard to transactions such as exports, because these are all based on the agreements, that is master service agreements will be there. We have to take into consideration the invoices, kindly take into consideration the receipt voucher, payment voucher, refund vouchers, self-invoicing. Self-invoicing is applicable in case if it is an unregistered person on which RCM is applicable. So all these documentary evidences has to be maintained by the assessees. Many a times these documentary evidences are not being either prepared by the assessee or the consultant. Ensure that you have all these information. To conclude, GST is document-based audit. So for each and every transaction, it should be supported by the document. Ensure that proper documentary evidences are being maintained and it is a part of your workings, so that in case if there are any notices, you will be able to substantiate it. So with this, I conclude the GSTR 9 for this session. Thank you for patient hearing. In case if you have any queries, I'm happy to take it. Over to you, Sahana. Hello, Sahana. I'm unable to hear your voice. Hello, Sumitra. I'm unable to hear your voice.
And the way you introduced the concept and the complex thing was really made it an interesting session. So thank you so much, sir. Yes, sir.
Thank you, Sumitra.
Okay, so I also request